We have some small remaining part in this question about principal residence. You already kind of covered it, but again, just to summarize, what you should do with principal residence.
Okay. Well, it depends. Assuming you are going to not sell it, you're going to keep it and you're going to rent it out. So when you say
Okay.
what should you do, if you want to break ties with Canada, then you should either sell
Yeah.
your principal residence, or rent it out on a long-term basis so that it is not made available to you.
But it's rented out, it's still on title.
Yeah, that's fine. But remember, it's not deemed to be sold because it's Canadian real estate. If you are renting it out, then this is what happens. Now you are a non-resident of Canada receiving rent from Canada. The payer, the tenant, must withhold 25% and give to the Canadian government of all the gross rental payments. Why? Because Canada, they can't track you down, so they move the responsibility to the tenant. So you have to tell your tenant, I am a non-resident of Canada, and they have to pay this to the Canadian government. Now, there are ways to reduce that 25%, but that would include you filing a special tax return in Canada to report the rent, and another form to, instead of the tenant withholding on 25% of the gross rent, they can withhold on 25% of the rent after expenses, interest, property
Oh,
taxes, all that stuff. So there there is an obligation when you leave Canada and you are earning rent. You don't need to file a tax return here if you don't want to, but the tenant needs to give 25% to the government. If the tenant does that, Canada doesn't care if you file a tax return because they're getting 25% of the gross rent already. So they don't care what you do.